Welcome to PlanB on YouTube. In this video I'll share my view on the Bitcoin market based on 7 charts. Now, because there's a lot of new viewers that are not on X, not on Twitter, I will explain a little bit more than usual in this video. So first we're going to talk about 2 charts, the stock to flow chart and the market cycles chart. That are my favorite, so those are my key charts. Then we're going to talk about 2 charts that are very well known and frequently used in technical analysis. Those are the RSI and the moving average charts. And then we're going to talk about 3 charts that are based on on-chain data. And that's very unique to crypto, to Bitcoin. You don't have that in stocks or bonds. On-chain data with all the transactions. So 3 charts based on that. And for today, I have something special. A bonus chart at the end. It's a new chart. It provides some very valuable insights, I think. So start with the first chart, stock to flow. And now forget everything you know about stock to flow. Just look at the chart and see what it tells you. On the x-axis, there's the date from 2010 to today, 2024. On the y-axis, there's the price of Bitcoin. And note it's on log scale. It's a logarithmic scale. So, for example, this is 100, but this is 200, 300, 400, 500, 600. The lines get closer and closer. And all these steps are a factor of 10. 10 times 100 is 1,000, 10,000, 100,000, a million. And why do we use the log axis and the log scale? Because we can see long-term trends way better. We can see we're interested as investors in returns. So in this 10x every cycle, for example, and not in the actual level. That's not important. It's about the returns. So this gives us a very nice view of the returns. And if you don't do it, you'll see that everything before, let's say, 2017 becomes a flat line here on the bottom. And then it seems like all the action is in the end of the time series, which is not true, as you can see from here. Anyway, so price is here. And then there's a third dimension. It's the color. And color here is months until the next halving. So it's just a timer from 48 or a little less than 48 months. 4 years until the next halving, and it counts down until 0, the month of the halving, and that's blue. So we go from red to blue, from red to blue. Why do we do it? Because it gives some situational awareness. For example, the green, which is 15 months until the next halving. Usually that's the bear market. 15 months before a halving is usually a bear market. But you can easily see where that 15 months is. So you can compare from cycle to cycle within the time series because of that third dimension. There's 3 lines in the chart. There is a price chart. That's the colored dots with this color overlay over it. Then there's the model in the gray line, and there's the error of the model. That's basically the difference between the model and the actual price. So the stock to flow model is basically just a fit through the data points. And normally you would see a straight line fit, which would be a log linear straight line model then. I didn't use that. You also see this very nice smooth curved lines, which on log would be a straight line, which is a power law, for example. Those are also nice, but my eye caught something different, and that's why I use this step function here. I noticed that all the increase in the Bitcoin price is basically after a halving. So when blue turns to red, that's when you see the jump in price. Blue to red, jump in price, and then it levels off. Here the same thing, puff, and then it levels off. So I modeled the stock to flow ratio, which doubles every halving, every 4 years. So the first halving was here in 2012. That was an official halving. The second one was in 2016. We had one in 2020, and recently this year in 2024. There's one unofficial halving. It's not a real halving in that the block reward changed, but the stock to flow ratio changed very rapidly in this first couple of years, which were crucial to the existence of Bitcoin. And this is where the stock to flow ratio flipped from, or doubled actually, from 2 to 4, and then from 4 to 8 in this real halving. But it actually had a unofficial halving in 2010, 11. So that's basically what it says. Then the error, a lot of questions about that. Basically, I wanted to put all the information in one sheet without using too much access. So one, I wanted to use this axis. One is when the model is exactly right and the same as the model price. So for example, this period here, this bear market in 2015 was exactly on this gray model line. And then the error here is 1. Bitcoin is above the model line. It goes above the 1. So this would mean it's 2 times above the model, 3 times, 4 times above the model. And the same if you look at if the Bitcoin price is below the model value, it's below 1, the error. And for example here, and then it grows to the model line here, and then it's 1 again. So that's the error. And so there's a lot of misunderstandings, by the way, about the stock to flow model. I wanted to talk about some of them. One misunderstanding is that this model failed because it didn't reach 100,000 here in 2021. And well, I'm a little bit to blame for that myself, because I have tweeted once that, well, if Bitcoin doesn't reach 100,000, then the model failed, which was actually not true. If you think about it. It's more what I meant with that, and I'll explain it with the error here. You see that sometimes the Bitcoin price is around the model line, exactly around it, like in the beginning. Sometimes the price is above the model line, like in this period and in this period. So my expectation for the last period, the 2021 or the 2020 to 2024 period, was that Bitcoin would reach the model price, which it did actually, right? It reached this 50,000 multiple times, but normally it has been below the model, of course, in the beginning, just after the halving, and later in the bear market. But I really did expect, and I would expect again if we were in 2020, that Bitcoin would overshoot the model line also, and it would overshoot it by a factor 2, which we have seen in almost every previous, in all previous periods actually. So it's not a weird thing to expect that Bitcoin reached the 100,000 last cycle, but it didn't. And in fact, it spent most of its time below the model line, which was a first, but not weird. Now, most people, because of recency bias too, most people think that this cycle will be below the model line again, and that's very understandable. However, there's as much chance that the model will be above the model line again, and like this period or this period. And in that case, I mean, the model line for next period is 500,000, right? That's about the level that we expect. And then normally we would go 2x over that, and 2x below that. So that's 1 million or 250K. So that would be the normal range around this model line. And by the way, that's the that's another misunderstanding, that these ranges are so huge. Like here, for example, last period, it was the model prediction was 50,000, and then the range was 2x that, 100,000, and divided by 2, 25. So everything from 25,000 to 100,000 was okay, and that's a pretty large and wide range. But on the other hand, Bitcoin has a volatility that's very large. It has a implied volatility of 80%, sometimes 100% in the option prices. So you cannot expect a model, which is a simplification of reality, and especially a very simple model like the stock-to-flow model, which only has one input parameter. You can't expect that to be very precise on an asset that has an implied volatility of 80%. So in fact, these ranges, well, everybody should decide for himself if that's useful or not. For me, having made this model at around 3,000, 4,000, predicting that it would go to 25 to 100,000 was very useful. And right now, we're at 60 something thousand, predicting that Bitcoin will go to 250,000 to a million. Wide range, but very useful for me. Everybody has to make that decision for himself. Now, one more misunderstanding is that I changed this model a lot, this formula. That's not true, and I understand why people think that. And I think it is because there's a lot of implementations of this stock-to-flow model. I mean, Fidelity has an implementation, Glassnode has an implementation, Looking Into Bitcoin has an implementation, Hamal. I think there's about 20 or 30 implementations of the stock-to-flow model that are frequently used, and they're not mine. So they all are slightly different, and they give slightly different values. Some update every day, some update not at all. But anyway, there's a lot of different models. They're not all mine. Actually, none of them are mine. Only this one is mine. But people think they're mine and that I change them all the time, which is not true. However, there are two model variants that I made myself, and there's some confusion about that as well. So there's one 100K model. So that's a model that has this straight line, the model line, for last period at 100,000. And I use that a lot on Twitter, but that model was specifically made for the discussion that we had in 2019 about, well, we only had 2 halvings before. Your model is based on the halvings, and 2 halvings is not enough to extrapolate into the future, to generalize on that pattern, which is a fair argument. But to counter that argument, I made a model with only 4 data points before the first halving in 2012. So that was November 2012, by the way. So I got 4 data points: October 2012, 2011, 2010, and 2009. October month close prices of those 4 years before any halving had taken place. From those 4 data points, I fitted the model, and that was the 100K model. So even before any halving had taken place, you could actually predict quite nicely where Bitcoin price would be, after each halving. And that was an extreme out of sample model, which I really liked, and I tweeted a lot about it on X. So a lot of people refer to that 100K model, but it's not the base model. The article that I wrote in 2019, right here in the green, is still the same formula that I use today. And there's a second variant. It's the stock-to-flow X cross-asset model. I wrote an article about that as well. I think it was in 2020. And that was another extreme model where we fitted on gold and silver and platinum and palladium data. diamonds data, real estate data, so other assets, hence the name stock to flow cross asset model. So even if you don't know the history of Bitcoin, the time series, from other assets, from other commodities like gold and silver and real estate that also have a stock to flow ratio, by the way, you can estimate what Bitcoin is worth. And at the time, that was $288,000. And it's not about the exact numbers. It was only to show that Bitcoin was severely undervalued at 3,000 or 4,000 or even 10,000 when this article was written. So two variants: the 100,000 variant based on 4 data points before 2012, and the 288,000 based on gold and silver. But those were for specific arguments at the time, and sometimes they're used still in 2024, but out of context, which is understandable because there's a lot of new people that missed this entire discussion. For now, I still use the same model. The formula hasn't changed. It is what it is. The outcomes haven't changed. This is still 50,000. This is still 500,000, and this is still 4 million. So, okay, this is the first chart. Right now, we closed, by the way, at $64,000 in July, and it's the 5th month in this 60K, 70K range. There is no direction whatsoever, despite the ETFs, despite the German government selling 50,000 coins, despite Mt. Gox that redistributed all the seized coins, and despite Trump embracing Bitcoin and want to make a strategic reserve with Bitcoin in the US. Nothing happened to the price whatsoever. So we're still waiting for directions. Let's go to the second chart. Second chart is the Bitcoin market cycles chart. And back in 2019, that's right here, when I made the stock to flow model, I basically only had the stock to flow model. And only since 2022, it's coincidentally also in a bear market in this green zone that I made that model. But only since that time, I also have this market cycles model. And this market cycles model gives me a little bit more information than stock to flow, than just Bitcoin pumps one order of magnitude after halvings. That's basically what the stock to flow says. But right now we know where we are exactly in the market cycle, which is a bull market, red. And well, although I never shared the formula of this model, because frankly it's too valuable for me, I do share the results, and that's also valuable, I think. So although you don't have the formula, interpret this as my view on the markets, my subjective view on the markets. But please note, it's very objective. It's based on on-chain data, and it's a hard calculation, yes or no, in a specific cycle. Now, very different from the stock to flow that can predict in the future. So 500,000 average Bitcoin price for this halving cycle, and 4 million the halving cycle after that. The Bitcoin market cycles model cannot see into the future. It can only detect in which phase it is right now. Bitcoin is in this red in the bull market at present, and it's at the start of a bull market because we haven't seen any movement yet. Now, I don't know when it flips to yellow, but as soon as we get there, I'll let you know. Now, note one more thing. The bear markets, the green, are very clean. The accumulation phase, blue, those are all very clean. Red and yellow is a bit messy. For example, 2013, that's the double peak bull market. It's flipped to yellow and then it flipped back to red. and ideally you would have this dots not yellow but still red, but it wasn't. So of course you go, maybe you sell your coins here, you buy them back here, you make some loss, but that would have turned okay in 2013. And you see the same in 2021, which we all remember very well. And when the stock to flow, of course, didn't hit that 100,000, we were all a bit like, hey, what's happening? Where is this bull market? Do we only get a 6x? What's happening? Now, we see it, the cycles flip to distribution, to yellow, and then flip back to bull market again, to flip immediately back to distribution. So these two are a bit off. It's like this was the real all-time high and this is just off. Now, maybe I can fine-tune these quirks in this model, but maybe I can't, or I want to keep the model as simple as possible, as clean as possible. So for now, it's still in there, and that will be very interesting when in 6 or 12 months time, I don't know, we'll encounter that yellow dot, whether that's a fake end of the bull market or a real end of the bull market sign. But as I said, I'll let you know. And I use this model a lot as one of the two main models. Now let's go to the two technical analysis models. And it's always good to have multiple models, multiple perspectives, I think, not only in investing, but with everything. And it's also good to look at some old school technical analysis. So in this case, we look at relative strength index, RSI, which is a momentum indicator. Everything higher than 50 is an uptrend, lower than 50 is a downtrend. A normal RSI range would be between 30 and 70. So for example, if you measure RSI on stocks or bonds or whatever, it's between 30 and 70. So you can easily see that a traditional investor would make that mistake for Bitcoin. It looks at the RSI, it sees 65, it said, whoa, that's high, it's probably going down. But if we look at a historical chart of the RSI, like this chart, we'll see that the range, the normal range, is between 40 and let's say 90, not between 30 and 70. It's a lot higher for Bitcoin, which is understandable because Bitcoin has been in an uptrend for its entire life. Maybe that will normalize over time, but for now, it's fairly high, the RSI, and but so it's very useful because in this chart, for example, what does it tell you? You can see the bull markets, the bear markets. It's like the tides in the ocean. It's greed and fear and greed. And it goes on and on. It's human emotion that you see, and that will not change ever. So I think it's still very useful to look at these RSI charts. And RSI is 66 now, almost unchanged from 65 last month. That's consistent with the market cycles, right? The bull market, it's above 50. It's in an uptrend, and it's consistent with stock to flow charts, which says Bitcoin is undervalued. And in my opinion, we just started this greed phase, this bull market phase, and RSI will increase from here to, let's say, above 80, possibly 90 again. And that would be like 2013, 2017, and 2021. So that's what I think. Second technical analysis chart is a moving average. Moving average are very useful to smooth out short-term random noise in the price data and to focus on long-term trends. Now, we're looking here at a 200-week moving average, so that's almost 4 years, which is really long-term, and I like it because it aligns with the 4-year halving cycles. I also like it because it always goes up. The 200-week moving average, the black line, always goes up. It has never ever gone down. So notice that this 200-week moving average was a support line in the 2014 and 15 bear market. It bounced from the 200-week moving average up into the next bull market. Then it was support again in 2018-19 bear market. And in the 2022 bear market, it crossed for the first time the 200-week moving average. So this was, if we look at 200-week moving average, the worst bear market ever that we have seen in Bitcoin. And then we also see that this moving average, this support, this historical support, turned into resistance. And luckily we broke that resistance and we crossed the 200-week moving average again. And we're now at, what are we, $38,000. And it's rising. This black line is rising every month at about, or a little more than, $1,000. Now Bitcoin is well above that 200-week moving average, as always, just after a halving, waiting for this bull market to happen. Very interesting, very useful indicator in my opinion. Now let's go to the on-chain indicators. There's three that I use a lot, and one is realized price. It's very unique data for Bitcoin, because only in Bitcoin and some other crypto, we do have all the transactions rightly available, and we can make analysis on it. So please note that I calculate all the on-chain data myself with data from my Bitcoin node. Most on-chain analysts, they use third-party data, like the data from Glassnode. But I really want to do it myself because I've seen a lot of mistakes, and I want to check and double check all that data, because I do have investments based on it. So this is my own data. Of course, I can make mistakes as well. Realized price is, by the way, comparable to the moving average that we just talked about. It's a weighted moving average, if you will. So what it does is all the 19 million Bitcoins and fractions of Bitcoins, all the fractions that are out there, all the 19 million Bitcoins out there are weighted against the last price that they transacted against. So the very old coins that transacted in 2013, for example, are weighted with a price of 100. But most coins are more recent, so they're weighted in this realized price with a price of 20,000, 30,000, 40,000, etc., etc. So then we get, if we weight all those Bitcoins that are out there, we get a price of $32,000 for the realized price. That's the black line, and it includes all the Bitcoins out there. If we only include the last 2 years, so the 2-year realized price, of course we miss all the older prices, so all the low prices, and so that value is higher. So the 2-year realized price is 50,000 right now. It's a dark blue line, 50,000. If we make that period even smaller, like 5 months, we only look at the last 5 months. What is the realized price there? It's what is it? 66,000, and Bitcoin is slightly below that, of course, right now at 64. But it's, well, in the global general scheme of things, it's at this 5-month realized price. Now, what's very interesting, two things. It's and please don't look at the exact number. So, for example, that Bitcoin is 64 and 2000 below the 66 5 months realized price. That's not really important. What's really important is that in bear markets, this short-term moving average, short-term realized price goes below the 2 years realized price and below the entire realized price. Same happened here in the bear market, same happened here in the bear markets, same happened here. So, and the other way around too. If the bear market's over and this short-term realized price crosses the 2-year realized price and the realized price, the bull market starts. That happened here. It happened in 2023, last year. So we're now at the beginning of the bull market. The other interesting thing is that the short-term realized price acts as a support line in bull markets. So we have dips in bull markets. A usual bull market can have minus 20%, minus 30% dips. We just had one here. But usually it doesn't go really far below the 5-month realized price. So that's very interesting to see. It happens every bull market that we stay more or less above this short-term hodler 5-month realized price. Very useful. Second on-chain chart is the realized return. Those are the people that sold in a month. So last dot here is the July sellers, and they got 15% return. That's green, 15%. It's not much for Bitcoiners. It's a lot for traditional investors, especially if you make that in a month. But still, it's profit, so it's good. I mean, blue, that would worry me a little bit, and red is what I expect in a bull market, so that's probably what's coming next. Well, not really more about the realized return than Bitcoin in profit. We know from all the Bitcoins when they are bought, and most are bought below this level of 64,000, so they're all in profit. In fact, 92% of all the Bitcoins, 92% is in profit right now, and only 8%, so those are the people that bought at everything above 64, 8% of all the Bitcoins is in loss. In total, there's not much loss, not much fear in the market, which is good. Now, the bonus chart. And it's a new chart. I never talk about this chart. I tweeted it on X last week, and it got a lot of questions and likes. So I included it here. It's Bitcoin miner revenue, and it's very interesting at the moment. So what we see is the blocks on the x-axis. Every 210,000 blocks, we have a halving. So there's a block every 10 minutes. 210,000 10-minute periods is 4 years. So every 4 years, there is a halving. We just had one in April. And what happens at a halving is that miners' revenue halves as well, because they mine the new Bitcoins. And this is only new Bitcoins, by the way. It's not the fees, which is a small part of their revenue. So it's the new Bitcoins that they mint. But after a halving, they get half of those new Bitcoins, and their revenue drops overnight, which is horrible for any business to be in. And they have to recover from that. So usually what happens is that the small miners that have old equipment, inefficient equipment, uses a lot of electricity, and also that have high electricity prices, they can't mine at a profit anymore, so they drop out. They just quit. They're running at a loss, so they have to quit. And the new miners, the miners with new equipment, the latest and greatest in hardware, very efficient and lowest prices, maybe free energy prices, those are the ones that can still produce at a profit. Those will survive. So this shakeout, every halving is a very important event, a Bitcoin-specific structural event that happens every 4 years. And the entire Bitcoin market, Bitcoin itself, has to survive that shakeout. And we're in the middle of that right now. It's always very volatile. Hash rate drops. Everybody's talking about miner capitulation and that the miners will just quit, which never happened, by the way. It's just FUD. But what's important is that this industry is growing a lot. So in the beginning, a monthly revenue was only about 1 million for all the miners in the world. Right now, we're talking over $1 billion every month in revenue for Bitcoin miners. And at the peak, it was $2 billion. So that halved to just under $1 billion. And what we see now is very interesting. The only way for miners to recover, for mining revenue to recover, which it always did, is for Bitcoin price to double. So the number of new Bitcoins in a block halved. So the price has to double to keep the mining revenue the same. And that's what we're waiting for. So what's very important is that we see a bottom in the mining revenue from where it grows into the next bull market. So we see a bottom here too, after 2016, and here same thing after 2012 halving. There's a bottom, and then puff, the bull market starts. It may very well be that we have seen the bottom of this shakeout, this after halving minor shakeout in June, because July already had a higher minor revenue than June. So what we also see is that difficulty, so the hash rate basically jumped today with plus 10%, and that indicates that the old miners, the old and small miners indeed left the market, and that the new equipment is taking over, and we'll see rising hash rates, which is good for Bitcoin security, and rising prices into the future. So that's very interesting to watch. Thank you very much for viewing this video. Please subscribe, and I'll make this video every month. First of the month, I'll give my market view. Thank you again, and see you next time.